The Dow closed above 17,000 last week. This week, we're seeing a pullback in the Dow and the other major indexes. So what we're seeing right now, is this a broader pullback or is this just profit taking?
Brett, in short, yes, the market has performed well, and we see it as some profit taking. And I think a lot of the activity that's going on in the market is not necessarily at the market level or at the index level. It's underneath, I'll call it underneath the market. So even yesterday, where the market was down about 0.5% on average, some stocks were down a lot more. For example, stocks like Twitter and some of the other social media stocks, some biotech stocks, networking stocks. So it's really a market that has two parts, the market and what's beneath the market.
So you see this as profit taking, but we haven't seen, a full correction defined as over 10% for 1,000 full days now. Do you think that streak's going to end this summer?
There's no way of predicting that, and I've seen all the articles, Fred, that suggest it's going to end, at 3 o'clock today or next week. There's really no basis for those articles.
Why not?
Well, it's really conjecture. It's psychological. It's saying that if the S&P hits 2,000 or the Dow hits 17,000, therefore there's a correction. The way we look at it, we look long term. And that's how we do it at Bryn Mawr Trust. So we look at the market as being fairly valued. So we see the market earning about, or the S&P earning about $125.75 in earnings for the next 12 months. The market at yesterday's level puts the price to earnings ratio at about 15.6 times earnings, which in our view is fairly valued, given not just the market itself, but also what is around the market. For example, GDP growth is still lackluster. Market tops are more associated with 3 to 4% growth. Inflation is still tame by all standards. Again, market tops associated closer to 3 to 4%. We've seen some nice improvement in employment down to 6.1% in June, but yet market tops associated with unemployment at 5% or below. So we see the market is fairly valued. We think the real issues go on underneath the market, stocks that are overvalued or stocks that are undervalued.